Greetings. Let's see how we can learn from past stock breakouts. Now in this example, I'm going to be taking a look at a stock here that was recently a candidate. I considered this for my paid clients when it was trying to break out here, and I'll show you why I decided not to highlight this breakout for clients. I'll discuss that in this video. But first, I greet you in the love light of the one infinite creator. So here is the stock. It is AU. That's the ticker symbol. Now compare this chart. By the way, just in relative terms, we can see there's a breakout here that takes place, let's call it sometime in February or March of 2024. The price there, we can see it was at about 18. It's currently trading at about 36. So we can say over the last, let's call it 1 year or so, the stock has doubled in price. So it looks relatively okay if you can take that. But compare this with GLD in the same time period. Now, GLD being an index is not going to move as fast, but compare this chart. This is a 2-year weekly. GLD also moved here, let's call it 190, now touching 280. So it clearly hasn't doubled in price. But take a look at the ride. GLD has been more stable to the upside. Compare that to this stock here, AU. So this is a mining stock, of course, gold mining stock. And we can see, take a look at this ride on its way to doubling. Not what I would want to be playing around with. Why? Because all these movements down here, all these reversals were good enough to get you out of the stock, either from frustration or just from being stopped out. Also notice that since September, so September here, you can see this is also another area where I decided not to give a breakout alert for paid clients here. Did not give that breakout alert to paid clients. Of course, we see that. And also one of the reasons is because in that same time period, take a look at GLD. So the ETF that tracks the gold index, you can see this was more successful with a move that since this breakout here hasn't looked back. So in September, the gold index goes higher, while this stock, the mining stock in September, actually ends up failing and sees a sizable drop after that failed breakout. So here is evidence that this stock doesn't behave in the way you'd want when gold is moving higher. Now, let's take a look at 3 years here. Now, this is 3 years, and I'm going to compare that now with GLD. So this is the kind of work that you have to do and I have to do for clients. Something I've done for 20 years is the fact that I have to go back and see how stock behaves. So you can see this is GLD. Take a look at GLD on this 3-year monthly chart. This seems to be sideways, and then we've had this climb. Nice gradual climb. Take a look at GLD, the power it has had since it moved above RSI 69.1 in, let's call it about May of last year. Since that time period, the stock has, or the gold index has been acting very well. Now compare that with this mining stock, gold mining stock AU, and you can see that we don't have the same look as that of GLD. This is all over the place. Now we're gonna go back. Let's go 5 years. I'll show you what I'm getting to. This is GLD, and this is 5 years. Compare this with AU in the last 5 years, and you can see the difference. This is AU the last 5 years. This thing is just all over the place, right? And you can see, take a look at GLD. In fact, GLD has just recently picked up momentum, and again, it's because of that movement above 69.1. But you'll notice something here that you could have not seen initially is, take a look at this breakout here. This is now the high of 2020, and we can see it is just now breaking out this month. So this is 2020, and it is just now breaking out. This is AU. Compared to GLD, the highs of 2020 are here. And so we can say that the GLD has been above 2020 monthly closing highs since over the last 1 year. And this instrument, this stock, is just now moving above the 2020 highs. So it spent the last couple of years in the doghouse. So this is not the kind of stock I would recommend to clients. Now, I want to show you a period here. Let's go back here so I can just cut to the chase. So this is all data. Let's take a look at all data for GLD. Now, what I want to show you, by the way, is take a look at this period from 05 here to the highs of late 2011. So this is from 05 to the highs of late 2011. Take a look at this performance. It's just did not move in that time period. Now compare that with GLD in the same time period, and you can see from 05 to late 2011, this moved from 40 to the highs here of around 180 plus. So let's call it 170. Is that right? Actually, it's 180. So it more than quadrupled in price. Now compare that with the stock here in that same time period, it went nowhere effectively. Didn't go way above the prior highs. So prior highs are here. So what I'm saying is, even as the stock is trying to break out, if you just do a little bit of digging in the current market and look at its past behavior, you can see that this is not what you want to own. And that's why I've been telling clients that GLD was the instrument to watch, and I've been recommending GLD based on this recent breakouts on the monthly because of the quality of its breakouts going back to prior breakout when it was trading well here. So looking back at the past behavior of an instrument can help you understand how it's going to behave in the future. And more often than not, they tend to repeat. That's it for now. I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.